the collapse that redefined trust. It began with a series of failures so sudden, so devastating, that the nation struggled to understand how everything could fall apart at once. Banks that had stood for decades crumbled in days. Fortune vanished faster than anyone could tally it. And beneath the wreckage lay a truth that would shake America to its core. Trust had been misplaced on a scale no one had imagined. To understand why this moment still matters, we must return to a time when the financial system seemed unstoppable. Railroads stretched across the country. Industries boomed. Cities expanded with breathtaking speed. Money flowed through banks, into factories, onto trading floors, and back again. Growth felt inevitable, almost automatic, as if prosperity were a natural law rather than a fragile arrangement held together by confidence and restraint. But beneath the surface, pressure built. Banks lent more aggressively. Companies borrowed beyond their means. Investors chased profits with increasing recklessness. Railroads expanded faster than demand could justify, financed by loans that depended on endless growth. It was a system inflated by ambition, running on momentum, and blind to the risks forming beneath its feet. The first cracks appeared quietly. A railroad project stalled. A major corporation missed a payment. A bank reported lower than expected reserves. None of these events seemed catastrophic alone, but each signaled the same underlying problem. Too much debt resting on too little foundation. And once questions emerged about one institution, they quickly spread to others. Investors grew uneasy. Merchants hesitated. Banks reviewed their balance sheets with a nervous eye. The outward shine of prosperity dimmed just enough for a few to notice, and that small shift in perception was all it took for doubt to enter the system. Then came the spark. A major financial firm, long considered untouchable, revealed losses so severe that even its strongest supporters recoiled. The announcement rippled outward, unsettling markets already stretched thin. Suddenly, confidence wavered. And as history had shown again and again, doubt was contagious. The early beats of the crisis formed with sobering clarity. Banknotes were questioned. Loans were called in. Projects were halted mid-construction. The same financial machine that had powered unprecedented growth now showed signs of seizing, its gears grinding under the weight of panic and overextension. People felt the shift immediately. Savings that once felt secure now felt fragile. Businesses sensed danger in every delayed payment. And beneath the rising anxiety, a chilling realization spread. The collapse was no longer a distant possibility. It had already begun. What remained uncertain was how far it would fall, and what would be left standing when the dust cleared. The unraveling accelerated with terrifying speed. What had begun as hesitation transformed into a wave of fear that swept through every financial district in the country. Investors scrambled to withdraw funds, sensing danger even before the numbers confirmed it. Bankers who once projected unwavering confidence now whisper behind closed doors, their voices tight with urgency. The failures continued to spread. Another railroad company collapsed under the weight of debt it could no longer service. Suppliers who depended on its payments faltered in turn, triggering losses across multiple industries. Each downfall exposed how deeply interconnected the system had become. A single missed payment no longer harmed just one firm. It weakened an entire chain of businesses, each link snapping under the strain of the one before it. Banks tried to distance themselves from the growing panic, issuing statements that insisted their reserves were healthy. But no amount of reassurance could counter what the public now saw with their own eyes. Businesses closing, loans being denied, and markets reacting wildly to every rumor. The tightening of credit, subtle at first, soon became unmistakable. Loans that kept factories running were rejected. Construction projects halted. Entire communities felt the sudden chill of financial contraction. Meanwhile, newspapers captured the crisis with headlines that grew darker by the day. Articles described plummeting stock prices, bankruptcies, and crowds gathering outside failing institutions. Even cautious reports contributed to the anxiety, confirming that the country had entered dangerous territory. People who had ignored financial news for years now read every word, searching for signs that the worst might somehow be avoided. Inside government halls, frustration mounted. Officials debated whether to intervene or let the system correct itself. Some argued that providing support to banks would prevent a full collapse. Others insisted that rescuing failing institutions would only encourage reckless behavior in the future. Their indecision allowed the crisis to deepen, leaving the public looking to leaders who could not agree on a path forward. The emotional tension grew as more families felt the impact. Fathers returned home with news that wages would be cut. Shopkeepers saw fewer customers each day. Parents whisper at night, wondering how long their savings would last. The sense of loss was not only financial, it was psychological. The belief in endless prosperity had evaporated, replaced by the heavy realization that the system's stability had always been more fragile than it appeared. Markets responded to every shift in sentiment. When a prominent bank announced unexpected losses, stock prices plunged further. When another institution quietly limited withdrawals, panic surged again. Confidence had become a ghost, something people chased but could no longer grasp. And as fear spread, even banks with strong reserves found themselves threatened by the sheer force of public doubt. By the time officials acknowledged the severity of the crisis, the financial contagion had already taken hold. The early cracks had widened into fractures, and the fractures were now deepening into chasms. The nation found itself drifting toward a breaking point, pulled by forces that no one seemed capable of stopping. The conflict had left the shadows. It now stood in full view, accelerating toward a moment that would redefine the country's understanding of trust, stability, and vulnerability. The breaking point finally arrived, not as a single catastrophic moment, but as a chain of collapses unfolding with merciless precision. One morning, a respected bank, long considered unshakable, failed to open its doors. A handwritten notice hung in the window, offering no explanation beyond the phrase, "temporary suspension." The crowd gathered outside didn't need more. They understood instantly that the institution had fallen, and with that realization, panic exploded into full force. Customers who had trusted their banks for decades rushed to withdraw whatever savings they had left. Lines wrapped around buildings. Tellers struggled to maintain composure as gold reserves dwindled far faster than anyone had prepared for. Managers attempted to calm the crowds, but their strained voices only deepened the sense that the situation was slipping out of control. Every withdrawal weakened the system further. Every anxious whisper carried the crisis to another neighborhood, another town, another bank teetering on the edge. Markets convulsed as the fear reached its peak. Stocks plummeted. Bonds became impossible to price. Investors dumped assets at any value they could get, desperate to salvage something before the collapse spread further. Even institutions that remained solvent found themselves threatened simply because the public no longer believed they were safe. Trust had become a rare commodity, and without it, the entire financial system shook like a structure built on sand. Inside government chambers, the atmosphere grew frantic. Advisors present reports filled with grim projections, cascading bank failures, mass unemployment, and a nationwide freeze in credit. Officials debated emergency interventions, gold injections, temporary shutdowns, new regulations, but each option came with consequences they feared might worsen the panic. Their hesitation only fueled the belief that the crisis was beyond control. Industry leaders faced their own reckoning. Factory owners announced layoffs as credit lines vanished. Railroad companies halted expansion, leaving workers stranded and materials unused. Merchants saw their inventories shrink as suppliers went bankrupt. The economy, once roaring with ambition, fell into a suffocating silence. Confidence, the force that had powered growth, had disappeared entirely. The emotional toll became unbearable as entire communities felt the weight of the collapse. Families who had saved for years now confronted the reality that their wealth had evaporated. Farmers unable to secure loans watched their crops spoil. Shopkeepers closed doors permanently, unable to survive the sudden drop in demand. The optimism that had defined the era turned into fear, frustration, and disbelief. And amid the turmoil, a bitter truth settled into the nation's consciousness. The crisis was not just a result of failing banks or overextended railroads. It was a product of a fragile system stretched beyond its limits, a system built on promises that could no longer be kept. As the panic reached its highest point, one question echoed across the country with haunting clarity. How could so many institutions collapse so quickly, and how could people ever trust them again? The nation stood at the edge of the climax, staring into a future shaped not by prosperity, but by the reckoning that comes when confidence finally disappears. The climax arrived with a decision that felt both necessary and devastating. With the financial system collapsing under the weight of panic, the government stepped in, announcing sweeping closures and emergency measures meant to stop the bleeding. For the first time, banks across the nation were ordered to halt operations, not because they lacked assets, but because the country needed time to breathe. The announcement stunned the public. Silence settled over cities as people absorbed the reality of what had happened. The institutions they had trusted for generations had proved vulnerable not to robbery or corruption, but to the simple truth that confidence had limits. When belief failed, everything else followed. And now, with the system frozen, the nation waited, uncertain whether this moment marked the beginning of recovery or the end of an era. Behind closed doors, officials outlined the rescue: stronger oversight, new standard for reserves, stricter requirements for transparency. Not every bank would survive the evaluation. Many would close forever, unable to meet the higher threshold demanded by a country determined never to repeat such devastation. But those that remained would emerge under a new system, one designed to prioritize stability over unchecked expansion. In the weeks that followed, markets slowly steadied. Businesses reopened with caution. Families learned which institutions would honor their deposits and which had been erased from the financial map. The recovery was uneven, painful, and marked by deep uncertainty. But it carried with a profound realization: the crisis had not been inevitable. It had been allowed to grow in the shadows of optimism, ambition, and overconfidence. The resolution brought a shift in perspective that reshaped the country. People no longer viewed banks as invincible. Policymakers no longer treated growth as guaranteed. And investors no longer believed that prosperity could rise forever without consequence. The collapse forced the nation to confront its own blind spots and to build a system capable of withstanding storms rather than merely riding the waves of enthusiasm. What emerged from the wreckage was a new understanding of trust. Not blind trust, not naive trust, but a trust grounded in accountability, transparency, and responsibility. The collapse had redefined the relationship between the public and the institutions meant to serve them. And in that painful lesson lay the beginnings of a stronger foundation. Subscribe to join the journey.